I think among all the discussions that we had in the earlier podcast, this is the first startup or the funding which kind of raised a bit of red flag when I was going through.
VC money can also be used for impact investing, as we are seeing with Eveez.
So if I look at the Indian and the global landscape, the global tech giants are also investing very heavily in this.
Hi, everyone. Welcome to another episode of Weekly Digest with Fibonacci X. This is a forum where we discuss about venture deals for last 15 days. We try to dissect them. We try to give them some insights on the sectors where the funding is happening. So today we have Preksha and Samir with us.
So this is when I chose JustLearn, right? It was one of those startups which obviously seems very good because it's creating AI-powered humanoids and immersive digital platforms to teach people the skills across various industries like hospitality, healthcare, oil and gas, and retail. And it recently got a strategic follow-up investment, a pre-series A stage, on in the month of March, and also in July. It's ongoing. It got investment from IIM Lucknow, the Enterprise Incubation Center, IIMLEIC. The amount is undisclosed, but the valuation is actually a discounted valuation at 120 crores, almost $15 million, right? Which is a huge valuation. So now coming to what JustLearn does, I think among all the discussions that we had in the earlier podcast, this is the first startup or the funding which kind of raised a bit of red flag when I was going through the venture. So as we discussed, JustLearn is creating that. Apparently, they have developed 1,500 certification courses, including 15 domain-specific programs, which are used for upskilling in real-world environments. So they're planning to include AI humanoids, AR, VR training systems, and in the articles that I've read, they state that they have already penetrated markets in Europe, Middle East, and India, which is good because the industry is very big. I mean, if you look at the industry of global edtech and skill tech, it's almost a $250 billion and it's growing at 12 to 13% CAGR. If you look at AI in education, that's almost 10 to $11 billion according to various sources, and it's doubling every 1.5, 2 years. And if you look at the AR and VR section in training and simulation, that's around $6 to $7 billion, and it's growing at a rate of doubling almost at the rate of 2 years, right? So it's a very growing industry, right? And it's a very lucrative industry. Obviously, edtechs have in India have a notorious history because they scale up to a very high valuation and then they also fall down really fast. But what caught my eye in this thing is that despite all the claims that we saw, right, and a very huge valuation, 120 crore is not small. It is still a decent chunk, and you expect some kind of revenue traction or some kind of solid, data out there. So I went to the website of JustLearn and I looked at the founders. The founders seem decent. The founder seems good. The founders are basically Abhishek Chola, who's the CEO, and Akriti Chaudhary Chola, who is director and content and curriculum head. So Abhishek looks into business and strategic part, and as well as creating the education platform. Akriti looks into lead content, creating the curriculums, localizing the program in India. Abhishek is more towards outside India. Now, when I looked at the fundamentals of the uh, Just Learn, went through the first metric, which is like if they're doing something such as e-learning platforms, right, or even physical learning platform, there should be proofs out there, right? Like terms or like there should be downloads of the app. So I went to the first natural thing was to go to Apple downloads or Apple Store and Android Store, Google app, and check the downloads of the app, which was three in Apple Store and I think nine or ten on Google. I think Google Play Store, right? Which is very low. So then I checked out their website, and the website again, when I'm looking from a point of investor as a VC, you do your due diligence, and even a few clicks on the internet can give you a good idea of what the startup is about. So despite having impressive valuation and apparently good backing by institutes like IIM Lucknow, I didn't see any tangible result out there, right? In terms of social media engagement, in terms of content in the website, in terms of downloads, usage, ratings, right? No testimonials on the website, no testimonials anywhere. So then I got a level deeper and I went to TechCrunch, checked out their valuation, I mean, the earnings or revenue, sorry. So at 120 crore valuation, right? And JustLearn is owned by the parent company called Just Rojgar, I think, Private Limited, which is again owned by Abhishek and Akriti. In last year, their earning was 2.66 lakh, which is very low, right? I mean, for Rojgar, the revenue, the parent company's revenue was 2.66 lakh. So I was wondering what was JustLearn's revenue because it is completely a subsidiary of Just Rojgar, right? Private Limited. So these kind of red flags popped in my head, and I was thinking, wondering, how is such a high valuation possible? Like 120 crore valuation, and that's apparently a discounted valuation because discounted valuation means that if it was truly valued, it would have been a higher valuation, like for example, 150 or 160 crore. So on the paper, it looks very good in terms of when you look at the articles and the claims that they have. But when I dig deeper, it seems like something which has apparent red flags that as a VC investor, or even if you're just learning about startups, or if you're like doing some research on stock market, raises red flags that is it actually doing that good? Like I don't see the numbers, the revenue, the traction, social media part, right? So I think I have a question to both of you. Like I have no idea if the valuation is justified, but like if you look at the revenue, which is like few crore, not even few crore, sorry, few lakhs, 2.6 lakh, very low traction, very low downloads. Just claims that they are doing this, they have not reached it. The company is almost 3 years old, right? And it has a 120 crore valuation. So does it raise red flags in your like mind?
Yeah, I think it's again comes down to value versus pricing. So I'm sure investors have looked at, they are able to see value which we are not able to see. Also, some information may not be public, some material information about their future growth plan. Because one of the
Hmm.
things which we need to understand is that public market investing and private equity investing versus venture. Venture is about future inflections about a business model where you are betting on the futuristic revenue stream, right? So it's not like private equity or public market investing.
So it
So
is very similar to the one who I think the team of OpenAI who left the OpenAI and started a new company, right? And right out of bat, they got a $1 billion valuation. So maybe it's also about the team, I guess, as you said, a lot of factors which are not there in public, like which I couldn't see at
correct,
least.
correct. So that's true. A lot of it comes down to the founder fit and do we believe in the execution capability of the founder, right?
Okay.
And I'm sure they have done their diligence. In the coming months, we'll get to know. If you just benchmark it to global, let's say, seed funding rounds for credible teams, then 120 CR is roughly what,
$15 million.
right? So that way, it's not that high, but
Hmm.
uh, seed round, typical seed round in India is much smaller, valuation is much smaller. There's no question on the addressable market, right?
That's so huge.
Uh,
Exactly.
Adoption of these methods for teaching, that's something which we will get to learn in the coming quarters.
So that is what caught me off guard. Like, and Indian markets have not come across like many companies which have very high valuation, but there is not tangible to be seen on the internet. As you said, it could very well be like they have done their due diligence and they have a team that they believe could execute it well. They're backed by IIM Lucknow, and they got a seed funding also apparently in 2023 at around $200,000, which is 1.6 or 1.7 crore, right? And this round, which happened in July 2025, there is no mention of how much money was raised, but it was a discounted valuation. So, yeah.
So the theme of the two startups which I'm going to talk about this week are going to be on AI. The first is Netrasemi, which is a fabless semiconductor startup. So, what fabless means here is that they don't do their fabrication on their own. So, I'm going to be breaking down the terms which are going to be used in this because it's not easy to understand in terms of technicalities. They focus on edge AI system on chip products and silicon IP. And what edge AI also means here is that running artificial intelligence models directly on device, not on cloud. So instead of sending data to a server, a chip inside the device processes the data in real time. For example, their real applications are in surveillance, industrial robotics, smart infrastructure. So let's say, for example, security cameras detecting motion or intruders, smart traffic lights adjusting based on real-time conditions, robots navigating factory floors, drones analyzing crops while flying. So for all these use cases, sending data to the cloud is too slow, expensive. So the chip inside the device does this work. Now, why they are building AI chips is it's not for your data centers or cloud stuff, but for on-device computing. And why this matters is because globally edge AI is booming, and everyone from Qualcomm to Halo to Alexa AI is chasing this. And in Netrasemi is coming up with an Indian first lens, and they are backed by government design linked initiatives, Merit, and they have created this full stack IP that they have developed for themselves. So for why what do I think here their USP is that their chips are not generic, they are specifically designed for AI tasks like video analytics, sensor fusion. Second is that they have built their own neural processing unit and IP blocks that run in AI locally on device with very little power. And that is perfect for places where power is very limited. So, unlike the next is that unlike many startups that license cores from others, they are building their own architecture, which gives them more control over the performance, cost, and security. Also, if I look at the Indian and the global landscape, the global tech giants are also investing very heavily in this. So, let's say, for example, Qualcomm is makes Snapdragon chips with built-in AI for phones. Apple has custom NPU in iPhones for face unlock, photos, Siri. Nvidia, AMD, Intel are building edge AI accelerators for devices, and AI chip startups like Halo, BrainChip has already raised millions to make specialized processors. What is really interesting is that they are going very deep into a very specific segment, that is edge AI, which is still a wide space in India. And by owning this chip design and building domain specific chips, they are not trying to outspend Qualcomm, but they are making a space for themselves which is of a more local relevance, and I think that is what their actual moat is.
And how much did these companies raise this month, last month?
So in total, they have raised 12.5 million, but in this round they have raised 800K US dollars, and they have raised this from Zoho and Unicorn India Ventures.
So they're backed by basically Zoho becomes a strategic investor. So what do you guys think about AI overall? What do you think? Uh, how will this affect venture in a way? Is this going to be same as, let's say, internet era boom? What are your high level thoughts?
Well, AI, obviously, when I look at AI nowadays and I read news about AI, first thing that comes to my mind is AI rappers. Like everyone is going, there's a debate going on the AI rappers, right? Is it good? Is it bad? What is the valuation? What is the fair valuation there, right? From so obviously, as someone said, and I read it on LinkedIn, like AI wrappers might be a wrapper on the AI LLM model. The LLM model is kind of a wrapper on the chip, the silicon chip. The silicon chip is a wrapper on the foundries, right? So it's someone explained in a very, I think it was a Perplexity AI founder. I don't remember exactly. He said everything is kind of a wrapper on the level above it, right? Or like the one which is it is derived from. So don't think of it as something very bad. Like, and eventually I was like, what are AI wrappers, right? If tomorrow OpenAI comes up with something of its own proprietary program or app, will the AI wrappers that are built around in that particular app will they go off? Maybe not. Maybe they'll adapt to it. But wrappers, I think, are very interesting because these are real world applications where people have the freedom to create whatever they want based on the LLM model. So it is a creative outlet that is being given to the founders to create something. And I think it's very healthy for the AI ecosystem to have as many creative wrappers out there because it shows the potential of what the LLM models are capable of. Right. That is from the creative point of view. From a venture point of view, I feel the valuation has to be very strict. It is very easy to go into a very high valuation based on the promise, but it might not lead to that. Like Perplexity is very good rapper. I think it was valued last time when around $8 billion or maybe $10 billion a month or two ago. But you cannot value every AI wrapper in billions until you know the usage and the metrics. For example, the number of users, the recurring users, monthly subscriptions. Like you need to have those numbers also at least in play to give it a fair value. So valuation becomes very tricky as we have seen in early 2000s when a lot of internet tech boom start was so valued very highly and then the tech burst happened, right? So from VC point of view, that is very scary, which means proper due diligence. Even if you know that you're giving it multiples in hope of getting like it capturing a certain market, you still need to have few metrics to measure it by. I feel that's what I feel needs to be done.
Mm, got it. Okay, so maybe AI overall will do a separate conversation altogether. We should do like 2 hour marathon on AI only. I have a lot of thoughts on AI. But yeah, as founders, if you are listening to this, I think the reflexive thought should be how can I, if you're doing anything, how can I integrate AI into this? That should be the reflexive thought. And there are a lot of free tools available. And once you start dabbling, then the easiest way to learn about anything is by trying, doing it yourself. So just try some of these tools. And even if you don't know coding or if you don't understand LLMs, you can still figure out a lot of things, at least how to give a good prompt, right? And so that's the starting point, right? So I think what it will do is if you're already, so AI is like a magnifier in case you already can think at a certain level, because that enables you to give a good prompt. So it enhances productivity of people who are already at a certain level. But if you cannot think at a certain level, then AI may not be able to do that much for you. Right? Even to identify the points where it can create value requires certain level of thinking ability. Right. So that's how I'm looking at it. And on productivity, there is a separate debate I can have about technology and labor markets and how it adds into GDP growth. Um, for a country like US, a country like India, both economies are very different in terms of their structure and labor markets. So we'll do AI discussion separately. We'll circulate some thoughts and then let's agree on some agenda. So another thing which I wanted to touch about is Pristyn Care, which was which wanted to build a asset light model using infrastructure available with private hospitals. But as all of us know, asset light is not the thing to do for all the businesses. Healthcare is another such sector where asset light in all cases may not work, right? So now they have done complete 180-degree and now they own 8 hospitals because they have realized that delivering quality healthcare experience on somebody else's property where you're just bringing doctors and you're generating leads may not be the best thing to do, right? So they, in the first 75 days, I think earlier this year, they started operating 5 hospitals. Uh, some, I think, couple of them in South Delhi also, and now they have 3 more hospitals which they have started. So roughly, they should have about 500 odd beds now operating themselves. There was another company called Glamio, if you guys remember, which failed, which was doing similar thing where they used to do elective surgeries on third-party infrastructure. So how this model works, what they were doing asset light earlier, is that you generate leads online, then you rent a OT in a hospital, in a private hospital. Doctors are yours, and that's it, right? You generate the lead, you bring them to hospital, you operate, and then they are gone, right? But the problem starts with post-op care, right? Because you don't have a physical infra. Which hospital or which doctor does he go to for post-op complications? Right? And I think their revenue channels were, obviously there was a surgery margin on the surgery fee itself, so that used to be split between, or that is split between doctor, hospital, and Pristyn Care. You can cross sell, upsell. Let's say you want to go for MRI, where should you go for X-ray, right? Those things you get a margin on that. You get a margin on diagnostics. Where should you go for testing, etc. So these were some of the, and obviously insurance. If you are doing handling insurance claims, right? So there also you can cut into some of the margins, right? So these were the revenue channels. The broader point which I want to make is that Glamio and Pristyn Care tried this asset light model. It didn't work. So Pristyn is now running 8 hospitals and probably going to acquire more hospitals. Uh, they are already a unicorn. They have stayed at the same valuation since 2021. And this round, they've just put in like 4 million. So that's internal round from the existing investors. Their revenue should be around 85 CR, I think 85, 90 CR at this point. And uh, I don't know the next round is going to be at a higher valuation or at a lower valuation. Because once you move into this hospital business, the multiple which you get is going to be much lower. But the revenue is going to be more sticky and it's more predictable cash flow, right? So what they're claiming is the initial hospitals which they acquired in the first 75 days, they already are generating 20% profit, right? So which is a good sign. So this is another uh, lesson for all of us, is that asset light is not good in all situations. It does not work all the time. It may not work, let's say, even in sectors like EV, where you actually need to own hard assets. So you cannot do it asset light. So interesting cycles. They wanted to do asset light. Now they are running 8 hospitals. May acquire more. Same is with, I see some similar trends in education as well, where offline education will continue to remain relevant in long term as well. Not only K-12, even for higher education, offline will always continue to remain relevant, right? Because it's high personal touch. Another company which I wanted to talk about is Eveez. I think all of us may have heard about Eveez. Eveez is mostly providing two-wheelers, EV two-wheelers to gig workers. And so they have this large impact angle to the whole business. And that's why this round was, led by Dell Foundation. There were obviously other investors like Carrot Capital, and we actually sat down with the partner of Carrot Capital, uh, Karan, few weeks ago. I think few months ago, he came to our podcast. So we discussed around EV. He earlier used to run a fund called EV2, which has done exceptionally well. I think his IRR is 40% plus cash on cash. They did, I think, 8 investment, and this is his second fund, which is in partnership with Carrot Capital, right? So, so in case you want to check it out, we'll include the link of EV2 and Carrot Capital in case you're interested. This fund, I think, is still open in case you're investing into funds. The way I will compare EV2 with Yulu, I think Yulu is the closest competitor which comes to my mind, is that um, Yulu is not confined to gig workers only. It You can also they also have the battery component to their battery as a service component to their business model. So that's how they're different. And in terms of fleet size, Yulu is obviously much bigger. I think they have about 30,000 vehicles, while for EVs, it should be around 7,000, if I'm not wrong. Valuation, I think, for this, Yulu is at around 14 times the revenue. This is my research. I may be, a little bit up and down depending on what they're doing. Eveez valuation is not available. And the differentiator for Eveez and Yulu is that Eveez is on franchise model. They do insurance. There is a social impact focus, particularly on gig economy workers. While Yulu owns the battery infra as well. They have a diversified business model, including individuals, enterprises, right? The good thing about EVs is that 45% of their users are switching from a ICE or an internal combustion engine to the EV two-wheelers. And 55% are coming from, let's say, very poor background and they are gig workers. So I understand the impact angle. So that way, I think both of them are clearly different. In terms of this round, um uh, so one of the interesting claims which Eveez makes is that they tell that there is no customer acquisition cost. There is zero customer acquisition cost, which I found interesting. And they tell that most of their users are coming to them by just word of mouth. So they officially claim that there is zero CAC. So, which is an interesting business model. So the weekly plans are around 1100 rupees, so very affordable. So in case you're a gig worker, you're making few thousand rupees. So 1100 is affordable, and that covers your vehicle uses, insurance, repair, maintenance, battery swaps, and basic EV training also. Before, let's say, if you're switching from a petrol or a petrol bike to a EV bike, then somebody has to tell you, okay, how many kilometers, how do you do swapping, how should you run, etc. Uh, Good thing is that they have partnered with companies like Zomato, Swiggy, so that way the gig worker economy is well covered, and Zepto. Uh, and all these, I think most of these e-bikes should be IoT enabled, so no surprises. It's a good story. They're targeting low-income communities, particularly from gig workers, and it makes sense because most of these gig workers are coming from there. So, two learnings from me from last 15 days. One is about the cycles, about asset light versus asset heavy. Asset light does not work all the time, and VC money can also be used for impact investing, as we are seeing with EVs. So, you are addressing employment, sustainability, as well as gig economy. So all these are merging into EVs, which is a good thing, I think.
That's interesting, actually. Yeah. I mean, I think they will. I mean, because of I think the coming of AI as well as EV in the last a decade, impact investing has gone up a lot, and investors see the potential. Like, if it plays out well, it plays out very well for them.
Yeah, so AI is working on two spectrums, right? One is the impact side, as we mentioned, that it can, for a society like India, it can impact hundreds and millions of people uh, in variety of ways, whether it's access to resources, uh, and the other side is we are also using AI is already killing people through, and it's called drones, right? So both spectrum are covered.
Two
People may
sides
not
of the
realize
coin.
it, but it's already, I mean, it's already killing people, which is okay. I mean, can't do much about it. And everybody who was worried about LLM models taking over now is investing and backing in drone companies heavily. So they can just do some kind of self-reflection, right?
True, true. I mean, yeah. So coming to AI, I think the next startup is not an AI based, but it's using a lot of AI tools and integrations into it. It's called Gupshup. It's a late stage investment that happened last month. Before I go to investment, every time you get a message from your bank, like IDFC Bank or HDFC Bank, or from a retail brand that you bought from, they send you a message on WhatsApp or PVR when you go to watch movies, right? Ki, hey, thank you for the tickets, or this movie has come out, or some promotion channel is out there. So Gupshup does that thing. It sends out the automated messages from based on what the inputs are from the companies, right? Last year, it almost released 120 billion messages of such messages in India and worldwide. So Gupshup basically caters to, I would say, an intersection of CPaaS, which is, I would say, CPaaS would be defined as, let me just look it up, communication platform as a service, right? So if you have a startup or a big company who wants to communicate with your clients, if you have a large client, especially in retail or some kind of industry, Gupshup is your go-to. Like, I mean, there are a lot of companies in India, like two, three companies similar to Gupshup, which are doing this, and it's a huge industry. CPaaS is almost around, according to various reports, is touching $50 billion in next 1 to 2 years, which is huge, right? And it's intersection of, as you were saying, Gupshup is the intersection of CPaaS, AI, and automation. So right now, Gupshup is like it has three, four verticals, and I know this because I did a research on the company similar to Gupshup because we were looking to have a DLT partner. DLT, if you don't know, if you're a startup or if you're a well-established company, right, who wants to reach out to a client, you need to have a DLT registration with a telecom company. It could be Geo, it could be any big telecom company. You have to pay 5,000 rupees for that. And after doing that, you then subscribe to a monthly or a yearly plan, or even the number of messages. For example, with Gupshup or some other companies, you can buy around 10,000 messages, right, for 30 paisa, 50 paisa, 70 paisa. Right. So that is what Gupshup does. They are creating channels to talk to your customers through WhatsApp, Instagram, SMS, voice, and even USSD, right? Which are not used anymore, but they're used in low connectivity markets like Africa. They are also creating AI powered agents to respond to create customer care services, basically. And they're also automating customer conversations. I remember having a conversation and I knew it was AI, but I got on after 5 seconds. I got a call and I pick it up. It was some promotion call, very well timed call, but it's still not reached the stage where you will not be able to decipher if it's AI call or not. So they're doing such kind of stuff. They're integrating AI agents into the ecosystem, click to add chats and AI co-pilots. And Gupshup, as I said, they sent out 120 billion messages last year. They are present in around 130 countries and have around 50,000 clients. Now, when you come to financials, and it's important because they are coming to a stage where they will go for IPO. In FY 22-23, they had almost 1,600 crores revenue, which is around $200 million, and a net profit of 50 crore rupees. Last year, the revenue almost jumped by 50% to $300 million or 2,500 crores last financial year, but they have not disclosed the profit yet. And the latest round, which happened last month, in July 2025, It was a late stage round, around $60 million, which is around two, one, 60 million will be around what? If we talk it almost 500 crores, correct? Yep, almost 500 crores. And it was a combination of equity plus debt round. The investors were Globespan Capital Partners and Evolution Debt Capital. The purpose of this investment was to fuel go-to-market strategy and expand AI agent capabilities in-house, and also grow in emerging markets like India, MENA, LATAM, and Africa. So they are based out of US, but they are trying to re-domicile into India and target MENA region, LATAM region, India, and Africa. They have a intended IPO timeline of 18 to 24 months. So within the next 2 years, they plan to have an IPO. Given that, interestingly, the valuation which they had for this round for $60 million is not out there. So the previous valuation was almost $1.4 billion in April 2021, when it raised almost $100 million from Tiger Global and Capital, and subsequently further $240 million. So given that their revenue is growing and it's profitable, I'm sure the valuation would not have been below 1.4. It should be more than that, around 1.5 to 1.8, but they have not disclosed the valuation of the previous round. So yeah, it's a late stage. They are almost pre-IPO, and they began as something that was providing, automated services, DLT ledgers, SMS services, and the AI was perfect timing for them, right? It's an industry which has benefited. I think communication as a platform as a service has benefited from the introduction of AI in 2020. So they have obviously benefit from the advent of AI, and they're capitalizing on that. And it's as big as you can get, right? So with the initial IPO plans coming in the next 2 years, they're racing to become, like India's Twilio, right? But with multi-language bots, because India is again a tough market to crack. Like if you want to go, not tough in the sense that you can't enter it, but to sustain, India is a very diverse and a multilingual, country. And there are omni-channels presence here also, like in a very strong way. So they need to crack that multilingual bots properly to be able to like actually capture a big share of the market right now. So it will be interesting to see how they use this $60 million to, not only for the IPO, but for the development of their AI agent bots, especially the multilingual bots.
Yep, yep. Thank you. So I think we'll take a pause here for this week. And I think in the coming weeks, what you can expect from us is around AI. We'll try to uh, do something more focused, maybe invite some external guests as well. And second is we are planning to do a quarterly roundup where we'll invite more investors and we discuss the themes. So those two things are something which we can look forward to. We'll include the links or the companies which we discussed, even some of the investors, their links in the description for this video. And thank you for watching us. I think the more interesting content is expected in the coming weeks. Yeah. Okay. Thank you.